November soybeans closed moderately lower. However, they are still up 41 cents for the week after the shocking USDA report that we had that cut 2.5 million acres of planted acres and almost the equivalent amount of harvested acres. So a lot less potential soybean production out there, even though they did raise the yield. Either way, for the day, the soybeans did close above the 50, 100, and 200-day moving averages that are all clustered between 1023 and 1025. We closed just above 1028 here today, so it held support, which was resistance earlier in the week. The trade will be watching the end of August weather very closely, as August is the key moisture-sensitive month for soybeans. And both the 6 to 10 and 8 to 14 day outlooks do have a swath of below normal precipitation in there for some of the major growing areas. So that is a bit of a concern, even though soybean crop conditions rated at 68% good to excellent are still rather good. We had weekly export sales today as well, and they were mixed. I say that because old crop, which by the way ends at the end of this month, was a negative number of negative 378,000 metric tons. That is a marketing year low, but do take that with a grain of salt, because at the end of the marketing year, a lot of times we'll see cancellations and or shifts to the new crop marketing year, and that big negative number was mostly that, with new crop sales coming in above expectations at 1.133 million metric tons. But again, a big portion of that, the 378,000 more or less, was all switched from old crop to new crop. So just sort of a balancing the books sort of activity happening there. The trade guesses, the estimate for new crop was 400 to 900,000 metric tons. So that did come in above trade guesses with that switching occurring. So lots to be paying attention to here in the soybean market. In the meantime, you stay tuned and you stay safe.